Welcome to the channel. Over the past few weeks, there's been a lot of buzz around a new exchange-traded fund. Investors, financial analysts, and even casual traders are all talking about it. But with so much hype, the real question is it really worth it? Today, we're diving into what this ETF is all about, and whether it's something you should consider for your investment portfolio. First, let's break down what an ETF is. If you're not familiar, an ETF is essentially a collection of stocks or assets that trade on the stock exchange. It's a way for investors to buy into a diversified portfolio without having to purchase each individual stock. And the big draw: they're typically low cost, flexible, and can track various sectors or indices. Now, the ETF we're talking about has been generating major buzz in the market. What makes it stand out is its unique focus. While most ETFs track broad market indices like the S&P 500, this new ETF targets a very specific sector. Insert sector here, e.g., renewable energy, tech startups, etc. But that's not all. It's also designed to leverage cutting-edge technology to track these sectors in a way that promises higher returns and lower risk. So, why all the excitement? The big draw here is the potential for significant growth. Many experts predict that the sector this ETF is targeting is poised for massive expansion. For example, the insert specific sector, e.g., industry is expected to skyrocket in the coming years, with new breakthroughs happening almost daily. This ETF allows investors to tap into that growth with just one investment, bypassing the need to pick individual stocks in a fast-moving, volatile space. But with the hype surrounding it, we have to ask, is it worth the risk? The reality is, while the potential for high returns is appealing, investing in niche sectors often comes with increased volatility. This ETF is no exception. With high growth potential comes high risk. You could see substantial gains, but you could also face sharp declines, especially if the market turns or the technology doesn't develop as expected. Here's the thing: no investment is without risk. And while this ETF offers exposure to a potentially lucrative sector, it's important to assess whether you're ready to take on that risk. Diversification is key. If this new ETF is part of a broader, well-balanced portfolio, it could be a solid addition, helping you tap into cutting-edge growth while mitigating the risks. Another factor to consider is the cost. While ETFs are generally known for their low fees, this particular one may have a slightly higher expense ratio due to its niche focus and the technology behind it. It's important to weigh those fees against the potential returns. If the ETF can deliver on its promise of high growth, the fees may well be worth it, but only time will tell. Ultimately, whether or not this new ETF is worth the hype depends on your investment strategy. If you're looking for an opportunity to dive into a high-growth sector with the flexibility and liquidity of an ETF, it could be a good fit. But remember, like all investments, it's essential to do your research, understand the risks, and make sure it aligns with your overall financial goals. So, is this new ETF worth the hype? It could be, but only if you're prepared for the volatility and have a clear understanding of how it fits into your investment plan. As always, make sure to stay informed and consult with a financial advisor if you're uncertain.